Hello everyone, welcome back to your channel. So in this video, I'm going to show you guys what I think you should know about the stock market. A full video of almost everything you should know. I will answer all of your questions about investing that I have received in several videos, like how to get started, which brokerages should I use, how much money should I start with, different type of investments, and where to find information and understand very basic and important terms in the investing world and more. If you're new to my channel, welcome. Please consider subscribing and smashing that like button since it really helps the channel out. Also, I have a completely free Discord group chat, which the link for that is down in the description below. Now, with all that said, let's get started. First of all, there are different types of investors. There are people that have a lot of time on hand to investigate, read, analyze, and all that. And you gotta first of all decide which type of investor you want to be, because we have two types of investors: passive investors and active investor. I consider myself an active investor because I spend a lot of time investigating, looking for individual companies and looking into individual stocks. An active investor is the one that at least once or twice a week read the news about the stocks that you own, what is going around with the company, read the reports, listen to the earnings call, and all that. On the other hand, a passive investor is that person that don't have the time or simply don't want to do all that work. Maybe because they work a lot, or they have a family, they have kids, and simply it's very complicated to sit down for a few hours and analyze companies, or it might just not be worth it for that person. One approach is definitely not better than the other one, in my opinion. I think one tends to be easier than the other one. As said, the active investor is an individual stock picker or individual stock investor, and the passive investor tends to be the one that likes to average into mutual funds, index funds, ETFs, as it has been tested that is one of the smartest and easiest ways to invest. Later on the video, when I explain the difference between stocks and mutual funds, ETFs, and all that, I'll give you guys an example, as those are mostly for passive investors. Now, after you decided which type of investor you want to be and what your goal is, then you decide how you want to invest. If it is either in the short term or for the long term. The way that I invest, and most people have succeeded very much on Wall Street or in the stock market, is by investing long term. Simply by buying a stock that you like, you investigate and hold that stock for years, which is why we should always try to investigate and invest in companies we see future potential in, and that it will be a good company for at least the next 5 years. Then the short term is people that want to kind of make a quick trade, get in and out of a stock really fast. Many like to make money fast and get rich quick, which is why most scammers do trading, as people want to get rich quick. Let me tell you that there is no such thing as get rich quick, even for day traders. I know or have heard of some stock and options day traders or swing traders that they make a lot of money with it and make a living out of it, but it is not the majority of people, because let me tell you that it takes a lot of hard work, study, practice, and experience as well to be able to be good as a day trader. If you are someone that is looking for a quick buck, then this might not be the best video for you. Now, remember we talked about passive and active investors, and how active investors tend to invest in stocks and passive in funds. Well, when someone invests in stocks, it's basically investing in a piece of that company. So let's say that you buy one share of Apple. Well, you will be owning a teeny tiny piece of Apple company. There are different types of stocks and companies, but some stocks give you some benefits, like they let you vote or invite you to their shareholders meeting online. Or even, for example, I remember that if you own at least, I think it was 100 shares or more of Royal Caribbean stock, then they would give you about $50 when you go on a cruise with them, so you could spend it on whatever you want. Then funds are basically ETFs, mutual funds, index, and all that. An ETF, or exchange traded fund, Basically, it tracks an index, a sector, commodity, or any other asset. An index tracks the performance of a group of companies or industries. This is an excellent way to diversify, in my opinion, and for everyone that don't want to invest all the money in a single stock, but don't have the time, as I said at the beginning, to investigate and analyze different stocks. For example, the VOO is an ETF that basically tries to track the S&P 500. The S&P 500 are the biggest 500 companies in the US, which many use this to see how the US and the economy is actually doing. Then the Dow Jones is formed by 30 companies and so on. There is basically an index for everything. There is an index for real estate market. There is another index for bond market and many, many more. The good thing about funds is that it diversifies your investments because let's say that you invest in the S&P 500 and one of those 500 companies go bankrupt, the other 499 companies will carry on that way and balance it. But the bad thing is that if you only invest in it, but one of those 500 companies turns into the next Amazon or the next Tesla, you will not see much of an effect because the other 499 companies will weigh it down as well. I do have to say that I believe it is the most secure way of investing for beginners. Now, there are also different types of investments or approach. We have technical analysis, fundamental analysis, and there is something called behavioral investing. First of all, technical analysis is something mostly for day traders and swing traders, as they want to get in and out really quickly and they trade based on technicals, the stock chart. I used to day trade with options and I have to say that that is not for me. Very, very stressful and difficult in my opinion. I used to sit for hours in front of my computer analyzing charts and all that and can't do it anymore. Then we have fundamental analysis, which is the one that I use as a long-term investor. I try to find companies that their current valuation is lower than what it should be based on fundamentals. Then behavioral investing is more like investing because of the news that are coming out. For example, the Apple event is next week, so people might be either shorting the stock or investing in it depending on what they believe will be the outcome. Now, I have received many questions from you guys asking which is this page that I use or where did I find this. The way I do research is like this. First, I learn about the company from the Discord group chat or from you guys or any other new company that I have not invested yet. I go to Google to find out what that company does, and Yahoo Finance, you can also find a tab called Profile, which is a brief summary of what the company does. In there, you also have several tabs, like summary to see each company market cap, PE ratio, earnings date, 52 weeks range, and more. Then on the statistics tab, you can see their price to sales ratio, forward PE, and many, many more important metrics, which I could do a video analyzing each one of them if you like to. They also have the analysis tab to see what analysts are expecting for this company. But after I read their profile, their metrics, and expectations, I would go to their investors website, where you will find literally every single report this company has posted ever. To find this website, I simply type company name, investors relations in Google, and the first page that appears, it will be the one. For example, if I type Apple Investors Relations, you'll see this one. When I get there, then I will most likely go to the SEC filing section and find their 10K and 10Q. These are forms that a company uploads. The 10K is the annual earnings report and the 10Q is a quarterly report. On the 10K, you will literally find everything you should know about the company. Their management team, what they do, how they make money, their financials, potential risks, benefits, everything. It is a long report, sometimes over 100 pages, but by reading the 10K, you will understand at least everything you need to know about a company before investing in it. Then the 10Q is their quarterly report, which is more specific per quarter and next quarter projections, which I always check the last quarter. Also, depending on the brokerages that you use to invest, they provide some nice information as well. In Fidelity, for example, they have this very nice portal where they analyze each stock and compare it with the industry. Also have many metrics, and also post some analyst reports talking about the goods and the bads of the company, which is something I also read if they post it, as it helps me learn more about what people think about the company. I know I don't care much about analysts, but every time I post what the analyst price target is and it looks like this, is because I'm using CNN forecast. I simply search on Google Apple CNN forecast. The very first link called Money CNN will show you this. And obviously, I try to read any recent news about this company on Google's new tab, Twitter, Glassdoor, and more, just to see what is going around the company. Now, many have asked me many times which brokerages do I use and which one do I recommend. To be honest, I started with Robinhood back in 2017, and I have used that as my main account since then. I have not had any problems, thank God. I do have two other accounts with M1 Finance, which I have to say that I love their platform. M1 Finance is very easy when you make a pie and just want to invest a certain amount of money monthly into that pie without thinking about individual stock pickings, even though I'm investing in individual stocks. Then I have another account with Fidelity to invest mainly in TrueLeaf, as it is not available in the other two accounts, and have an account in Interactive Brokers, as many of you watching this video are international, so I decided to try it out, give it a try to let you guys know what I think about it. To be honest, it is one I recommend for people without a social security number. I have only been using it for a month or two, but so far I think it is very nice. There are different apps available out there. I have free affiliate links down in the description below if you would like to open an account with any of them that I just mentioned and you want to support a channel, as most likely you and I will receive a stock for free. Another question I get a lot is how much money do I need to start investing? To be honest, I can't tell you an exact number because it all depends. If you have a debt, your income, everything varies from one another. I could easily tell you to start with $100 or $500, but if that is all you have saved up and you are starting out, then maybe that is not the best decision. I do have to say that starting is the important thing. It could be with $10, $50, $100, $1,000. It doesn't matter. The important thing is that you start investing and start investigating, because with time you could continue adding more and more monthly or weekly, and it will start adding up. Don't feel that because it is a small amount of money it is not worth it, because believe me, it is really worth it. My recommendation for all of you, let me tell you something. There are different ways to learn how to invest. You could buy a course, you could read books, watch videos, watch movies, whatever you want. But in my opinion, the best way to learn is through your mistakes. Obviously, books are going to teach you a lot of things, but your mistakes is different. That is what is going to teach you the most. Yes, you will most likely lose money doing it sometimes, but that mistakes will help you learn how to be a better investor and make more money over time. Start small, get your feet wet, but start today. Open an account, start investigating companies, decide which type of investor you want to be, which type of investment you like the most, either short term or long term, and if you want to invest in stocks or funds. I was talking with a friend the other day that is just starting out, and he was asking me where he should invest, and to be honest, even though I'm not a financial advisor, I can't recommend you guys anything, so this is not financial advice. I have always thought that the best and safest way to start investing is to start doing research on the S&P 500. Invest in it constantly, monthly, while you get your feet wet with stocks if you want to be an active investor. The S&P 500 has returned an historic annualized average return of around 10%. That is why most people invest in it in their 401k long term. Also, once you get started and invest in any company you already done a lot of research on, never panic if the stock drops just because the market is dropping. If nothing has changed with the company, find out why it is really dropping and see if it changed that why of why you invested in that company. But as Warren Buffett said, the stock market is that device to transfer money from the impatient to the patient, because many try to make a quick buck and panic sell when they're losing $2, even though they could have waited a day, a week, or a month and recover that money. If you invest long term, it is because you are willing to hold the company, that stock, for the next 5 to 10 years. Also, never try to time the market. Many have told me to sell everything and hold on to my profits as a crash is coming. But to be honest, I have been hearing about a crash since I started investing. Never stop investing because of it, but always try to have cash on hand in case that crash, correction, or dip happens and you need to average down. Because as Peter Lynch said, far more money has been lost by investors trying to anticipate corrections than lost in the corrections themselves. Hope you enjoyed the video. Let me know if you guys like this type of video. I could do a series of it. Consider subscribing and smashing that like button since it really helps the channel out with the YouTube algorithm. Thank you and see you next time.